What's going on, NuView audience? This is Alex Sylvia, IRA Specialist with NuView Trust Company. And this Wednesday, we got something a little bit special, something that's arguably for the beginners out there. But to all you advanced or intermediate investors that have already gotten your feet wet with some alternative investing or even investing in something traditional, maybe like the stock market, there might still be something for you to learn here. You know, this webinar today, Investment Types 101, we're really just going over really any investment type that I could think of, right? So we're talking about different types of real estate investments, private equity, lending using promissory notes or other types of notes. You can get really creative with those. We'll also get into precious metals, cryptocurrency, and then, traditional investments, stuff that might be related to the stock market. So I'm going to try to cover it all today. So please pay attention, take some good notes, write your questions down, and overall try not to get too bogged down with all of the different investment types out there, because your number one job as a self-directed investor, it's not to do everything. It's not to be the jack of all trades and master of none. So the goal of this webinar is really just to expose you to all the opportunities out there, give it a little self-directed IRA flair if you want to use something tax sheltered like a NuView IRA, 401k, HSA, or ESA. And we'll just go, one by one, different investment types, through the different asset classes or industries. And you just pick one that interests you and do your best to study it and learn as much as you can before getting involved. In the world of self-directed investing, especially if you're not working with a financial advisor or somebody that's guiding you on your investments, you're your best asset. You have the quality of being able to guide your own investments with what you learn. So at the end of the webinar, we'll have a couple of resources if there's something that interests you specifically, and then you can just be on your way to, like I said, learning as much as you can and ideally becoming a confident investor. So just like all other NuView webinars, we do have a couple slides that we need to cover before we get started. Number one is our disclaimer. NuView Trust Company, we're not in the business of giving tax, legal, investment advice. We're a passive custodian, which means we can provide to you the tax sheltered investment vehicles like the IRAs, 401ks, HSAs, and ESAs. But when it comes to the investments themselves and the due diligence associated with it, that's where the self-directed part of investing comes along, especially if you're using one of NuView's accounts. So keep that in mind. If you have any tax or you need for tax advice or financial advice, legal advice, we definitely recommend working with professionals in those fields if you feel like you need that assistance. So what is a self-directed IRA? And at the end of the day, a self-directed IRA is no different than any other IRA out there. The difference lies in the custodian themselves and what they'll allow you to invest in. So the Fidelities, the Charles Schwabs, the TD Ameritrades, they're primarily offering stock market related products, stocks themselves, stock options, bonds, mutual funds. And at NuView, we don't offer any products. We don't make commissions off of any of your investments. You, the self-directed investor, locate your own investment ideas and you direct your custodian, NuView in this case, to facilitate that investment on behalf of your IRA. So self-directed IRA, it's a marketing term. Our IRAs operate by the same rules as those other conventional, traditional custodians out there. The difference lies in the custodian and what they'll allow you to invest in. Now, the benefits of self-direction. Now, benefits of self-direction is in the words itself. You can self-direct. You can take the reins to your own retirement, right? And now, if you couple that with tax shelters like IRAs, 401ks, HSAs, and ESAs, then you can really do some damage if you have a skill set or something that you know or are interested in. Now we're here to tell you about the ways and the different investment types that you can apply those in something tax sheltered, never have to pay a dime of capital gains tax again, right? And that's a benefit that comes with all IRAs. But what comes with NuView IRAs is arguably a higher level of diversification that's possible to you. You can invest outside of the stock market, arguably into something tangible or cash flowing like real estate. And obviously the list is very, very long, but the important part is investing in what you know best. And that's the goal of this webinar, is to introduce you maybe to some things you haven't thought of. When you're getting started investing, sometimes the most daunting part is just figuring out what you want to invest in. And today we're going to give you a whole heck of a lot of options of what you can invest in. And it's going to be your job to pick one or two and just really hone in on those and, increase your knowledge base so that when you are ready to start investing, you know exactly, what to do, what the path forward is, the do's and the don'ts. And then if you want to use something tax sheltered like a NuView investment vehicle, then after this webinar, you'll also know how we facilitate those transactions and how it might be different than doing those same investments in your own personal name. So at NuView, we do have a couple different options as far as what plan or what account type you can use to do your self-directed investing. Number one, we have our personal plans being your Roth and your traditional IRA. Both have the tax benefit of eliminating capital gains tax, but that Roth IRA is going to be income tax-free on the back end at retirement age when you start taking qualified distributions. And the traditional IRA is going to have taxed as income distributions at retirement age. So big difference between those two is their tax treatment. We also have employer plans like the SEP IRA, 401k, solo QRP, simple IRA. These are primarily for self-employed people, and the IRS allows self-employed people to kind of jumpstart their retirement. So these plans do have higher contribution limits than your personal Roth IRAs or traditional IRAs. Also, your specialty plans, these are the use now plans because you don't have to wait until retirement age to start getting a tax benefit from these accounts and actually using them for qualified medical expenses or qualified education expenses for a child that's under the age of 18. Now, with IRAs and self-directed IRA investing, there are some restrictions that apply that don't apply to investments made in your personal name. And this is because your IRA is a separate entity from you. And as the IRA owner, you have a responsibility to act as a fiduciary of that IRA at all times. And that just means that you have to act in that IRA's interest, or HSA, ESA, 401k. You have to act in that entity's best interest at all times. For that reason, the IRS does not want to see any instance or possible scenario where there might be conflict of interest. They don't want people self-dealing with their IRAs. Specifically, we'll go down the list: buying, selling, trading, loaning, or extending services directly or indirectly between themselves and their IRA, HSA, ESA, 401k, or with any other disqualified party. And that's the people restrictions you see at the top there. The transaction restrictions go hand in hand with the people restrictions, and investment restrictions are just two asset classes that the IRS does not want to see in IRAs or any of the other tax sheltered accounts I've previously mentioned. So the people restrictions, disqualified persons. Number one, it's the IRA owner and the IRA owner's spouse. And like I said, this is because the IRA owner, they need to act as a fiduciary and act in that account's best interest at all times. That responsibility does also extend to family members, including the IRA owner's spouse, lineal ascendants, and lineal descendants as well, up and down the family tree. The IRS views these people as the likely beneficiaries of the IRA, so it's important for these people to also act as a fiduciary and to not have any conflict of interest or situations occur where there could be perceived conflict of interest with the tax sheltered account. And like I said, the transaction restrictions go hand in hand. So when we're talking about disqualified people, prohibited transactions occur with disqualified people. Right. So as I said before, you can't buy, sell, trade, loan, or extend services directly or indirectly between IRA owner and the IRA or other tax sheltered account, and also up and down family members. So those lineal ascendants and descendants. The investment restrictions are really easy. It's only two assets that the IRS does not want to see in an IRA or other tax sheltered account, and that's life insurance contracts and collectibles. Life insurance contracts, they do unfortunately pay out when somebody dies. The IRS just doesn't want that type of investment inside of a tax sheltered account. Collectibles, collectibles are hard to value. So another reason why the IRS doesn't want these in IRAs is because every year they require that all IRAs or tax sheltered accounts report their fair market value, which can be difficult with collectibles. Collectibles, they're worth about as much as somebody else would pay for them, right? So it's an illiquid market. It's hard to value if you're talking, paintings, collectibles, cars, antique cars, things like that. They're just hard to value. And since the IRS requires yearly reporting on fair market values of IRAs, those two investment types are just no-goes for IRAs or other tax sheltered accounts. Now, what can you invest in? And this is kind of the meat and potatoes of today's presentation. This even what we've got listed here for real estate, what we've got listed here for promissory notes, private equity, it's all still just scratching the surface, right? And, it's all, they're all can be considered valid investments for an IRA. So we are going to get a little bit into NuView's process for each one of these asset classes individually. So if it's time for you to use a tax sheltered account to start making some of these investments, we're gonna tell you what exactly NuView needs to make that happen for you, right? And this NuView's proven process right here, this is very just generally speaking, set up your account, get it funded, work with our investment specialist to get it invested. But like I said, this kind of just scratches the surface because each asset class does have a little bit different of a process when it comes to instructing NuView or your self-directed IRA custodian to facilitate it on behalf of your IRA. So we're going to get into all that good stuff today. All right. So the first asset class that we are going to be talking about today is real estate. And real estate, it's two words, but it could mean a heck of a lot of different things if we're talking about investing in real estate. And just to kind of go through the list one by one with maybe a little short description of each. And of course, write down your questions. We'll have a Q&A at the end. You can shoot them my way and I'll do my best to answer them. I have said before, I'm not an investment expert, but I do have a pretty good idea of what different investment types are like, what they're trying to accomplish. I know the IRA aspect of it very, very well. So that's why I do encourage you to do some extra research outside of this presentation, because like I said at the beginning, I'm not in the business of giving financial advice. This webinar, it's really just serving to give you an idea of what's out there, and then you can do some more research. Like I said, I've got some resources at the end that might point you in the right direction. But I do know a little bit about each of these and how they might be perceived in a self-directed IRA. So especially for you NuView clients out there listening, if you notice on this list, there are some types of real estate investing that have an asterisk next to them. And that's because there are some additional considerations to make when making this type of real estate investment inside of a self-directed IRA. So number one on the list, we've got rentals, single and multifamily. And this is arguably one of the most popular investment choices of NuView clients, especially in their self-directed IRAs, 401ks, HSAs, and ESAs. And this is because they are passive, cash flowing investment types. Not only that, it's also a process that a lot of people have already done in their lifetimes. If they've bought a house, or even if they've just been party to somebody else buying a house, they might already have a general understanding of what needs to be done and the steps in the process that they need to take to invest in a piece of real estate, or just to simply buy a house, right? And with a self-directed IRA, not much changes except for what name is on the buying contract or on the title, at closing. In the case of a self-directed IRA, it's going to be the IRA's name, in which case there needs to be a custodian that's signing off on behalf of the IRA to purchase that property and have it wholly owned by the IRA, right? So not much changes, it's a name change. And because of that, who's signing off on the paperwork changes as well. But rentals, single and multifamily, like I said, arguably one of the more popular choices of NuView clients. Like I said, just because of the cash flowing aspect of it, not only do they get the appreciation of the property itself over time, but they also possibly get to have a monthly cash influx as well from rental income. And that can really add to the power of compounding interest. So definitely very popular choice right there. Next, we've got Airbnbs. This one should have an asterisk next to it as well. These are very short-term rentals, right? And one thing that the IRS likes to see in IRA investments is how passive is that investment? They don't want the IRA owner to be too active, and they also don't want the investment to be mimicking business activity, because you're in a tax shelter, right? That wouldn't be fair to all the other businesses that are being taxed like normal companies. Airbnbs are unique because there's no finite number that the IRS says, hey, if you rent this Airbnb and you're renting it for 2 or 3 day terms, almost like a hotel would, they're going to start taxing your income like a business. And that's when your IRA becomes a taxpayer, right? And this is a very unique situation. And that's why we've had a special webinar that I think we did about a month and a half ago, maybe a little bit longer, with CPA Adam Barr, talking all about when an IRA becomes a taxpayer, right? And the important part is when the IRA's investment starts to mimic business activity. Airbnbs, it's a fine line with the IRS, because there's no, like I said, there's no specific number that they say, hey, if you rent this property on a more frequent basis than 7 days, 6 days, whatever it is, then we're going to start charging you as a business. But we have had clients do it. They're keeping the rentals maybe medium to long term, so they're renting to, business people coming into town where they might need to rent that Airbnb for a week or 2, 3 weeks at a time. And they're making it work within their self-directed IRA. But as far as what's going to trigger that business tax that might come with it, we definitely recommend talking to a CPA, definitely somebody that's familiar with self-directed IRAs, who might have an idea of what that threshold is, or at least be able to give you a strong backup as far as how short or how long those terms should be, without flirting with danger with the IRS, right? And if it's something where the opportunity, you only want to rent that Airbnb for 2 nights at a time, 3 nights at a time, and really get the most out of that, higher than normal rental cost, then it may just not be the right investment for your IRA, right? Because if you do something prohibited, at least under the current rules, you're risking, having your entire IRA distributed, taxed, and possibly penalized as well. And that's just not something that we encourage clients to flirt with, right? So definitely get some legal help, some guidance on that. And at the end of the day, just make the investment that's most comfortable for you, that's the most passive as possible for your IRA. Not to say that Airbnbs are impossible, because we've got a lot of clients that do it. Just approach it with the understanding that you might have to navigate, some possible taxation on the income. Right. And that's also why fix and flips there has an asterisk as well, is because the frequency of flips is something that could also raise red flags with the IRS. Again, something that there's no specific number where they say, if you do more than X number of flips in a year, it's going to be perceived as a business, right? But if you do just one, let's say that you want to jumpstart your IRA, in most cases, we've seen clients do that and it's been okay. But if you do go and watch that webinar that we did with Adam Barr, CPA, he does mention that the intent is what matters. If you buy a house with the intent of renting it out and something in the process goes wrong and you end up just flipping it or selling it to another investor, likely that argument made in court against the IRS would pass. Now, if your intent was to fix it up and flip it in a very short time frame, and you had no intention at all to rent it out and make it a long-term passive investment, that could be perceived by the IRS as business activity, or at least you had motivation to do something similar to business activity inside of your tax sheltered account. Again, this is just a reason why we encourage the legal counsel, because if you flirt with getting into trouble with the IRS, it's just not a good place to be in, especially when we're talking about your tax sheltered precious dollars that you've built up over your lifetime of working, and you just want to protect those dollars. Again, if you start analyzing your situation and you just find yourself going through the motions and not really coming to a conclusion and not knowing if something's black or white or gray or somewhere in between, if you have to ask yourself that many times, again, maybe it's just not the right investment for your IRA. Maybe it's just not worth the risk. So just keep these things in mind. This can also be said for real estate contracts as well, because we've got clients that like to flip contracts, right? And same thing, there's no finite number as far as how many you can do. But again, it is possible within a self-directed IRA. We've seen clients really jumpstart their accounts. Let's say they maybe didn't have a 401k at a previous job and they're just starting a new IRA with $6,000. Well, what can you do with that in real estate? Really, outside of flipping contracts like wholesale contracts or real estate options, it's sometimes a higher barrier to entry with real estate, because you either need to have a lot of money up front, or you just need to know some unique strategy to be able to, make a lot out of a little. And real estate contracts can be that asset for you. Like I said, you just want to be careful with the frequency of it. Talk to a CPA and just get some legal guidance. So next on the list, we've got land or land banking. This is really unique because essentially what the strategy is with land banking, you can invest in just parcels of land as well and just, get the appreciation or sell it to an investor later. But land banking specifically is the targeting of parcels of land that are in the way of future development plans, right? So the goal is to buy a piece of land, know that there's planned development in that area in years to come, and that your land is going to be in the way of that development, which means that buyers of that land, people that want to develop that property, at some point they might want to pay a premium, right? And just by being a little bit more specific or particular, or maybe even speculative about where you're buying your land, can really possibly increase your returns on your investment versus just buying a plot of land that's in an area that's just not going to be developed, right? There still could be use for that land. It still could appreciate over time, but land banking specifically is very, very specific targeting of land that's in the way of possible future development. So really, really unique idea there that maybe not a lot of people have thought about. Commercial property, that's where we're talking about shopping centers, possibly, apartment complexes. These are big ticket items, right? And oftentimes if it's a commercial property and it's part of a shopping center, you are a little bit reliant on the business's success for those businesses to keep renting, that space from you. The same thing can be said with single family rentals. You've only got one door. If somebody leaves, a renter leaves, you're stuck with having to, still pay the mortgage without the rental income coming in. So there is always that little bit of risk with real estate. And that's why some investors might opt to invest in multifamily. So there's, many different doors, whether it's, a duplex, triplex, quadplex. And then with commercial property, maybe apartment buildings as a whole. And now you've got, 500 doors as opposed to just 2, 3, or 4. That alone is a type of diversification itself. So commercial property, even though it's businesses that are renting from you, you still kind of have to take the same approach and kind of know what you're getting yourself into and kind of have that backup plan if you lose renters, right? So more doors is oftentimes a diversification method for real estate investors. Another way to invest in real estate as well is auction property. And oftentimes auction property comes from what's next on the list, which is distressed property. These could be people that are going through evictions, code violations. The property could be in probate. It could be halfway through the foreclosure process. Now, when the property does get foreclosed on, normally it goes to auction. So auctions oftentimes just have discounted properties. You have to bid on them, possibly, pay a little bit more than what you were expecting to, or you could get a really, really good deal. And the distressed property, that's what usually ends up at auctions. But distressed property, like I said, homes that are, people that are getting evicted, people that are halfway through the foreclosure process. Yes, it does give you an opportunity to possibly buy a property at a discount, but from a community building standpoint, you could actually help a family stay in their home. If you got a family of 4 and 2 kids have just started in school, and unfortunately, maybe one of the parents got laid off and they have to move, right? Those kids have to get uprooted from a school. The family has to completely change their, community and where they're living. And investing is an opportunity for you not just to buy a piece of stock, but possibly help out a family in your local community or just add value to your community in a way that you possibly haven't thought of yet. You can put your dollars to work, but it doesn't have to be Coca-Cola stock or Walmart stock. It could be right in your backyard, right in your local community. So that's one aspect about investing in general, self-directed investing, that I really like, is that you don't have to be so far removed from what your investment's doing, right? It can be in your backyard. You can have a positive impact on your local community just by thinking outside the box about where to put your hard-earned dollars when you think about investing. Syndications, next on the list. These are typically large funds where, a couple people, they're just deciding to pool a lot of money together from a group of investors for large projects. A lot of times it's apartment complexes. So the investors, they all get a return on their money, possibly monthly payouts. And this is just a way for somebody to get involved in multifamily investing or apartment investing without having to supply all of the capital. They're just one of many investors that are contributing to the overall fund that owns the investment, owns the property, manages the property. Still a very passive way for people to get involved with real estate. So this is a great opportunity for self-directed IRAs. The rest of them, we'll just kind of go quickly. We got self-storage units, which a lot of people don't think about. We're running out of land to build more houses, so what are developers doing? They're building up, apartment complexes, condos. And when you have, the living space that comes with those types of properties, apartments, and condos, a lot of times families just don't have enough space. So they need to use self-storage units. And this is a very, I guess, up and coming investment type that we've seen a lot of NuView clients make, is investing in self-storage units. And the reason why, that has the asterisk next to it is because, with self-storage units, the way you invest in the self-storage units you got to be careful with it, because if you're owning the business outright in your IRA, then like we've talked about before, you're going to be taxed as a business, or your IRA is going to be taxed as a business. Now, you could, loan money to a self-storage company, but that's just a different asset class as a whole. That's notes. And we're going to talk about that next. So just, again, it's a unique asset class. So definitely give us a call if you want to talk about it a little bit more, but just for the sake of time, we're going to keep working our way through. Marina or mobile homes. Sorry, that's another investment. Now, since mobile homes aren't technically real property, it's not the land itself. This is an instance where if this type of investing is done in an IRA, it might not be viewed as a passive investment. It could be viewed as you owning, a business or something that gets leased on on some type of time basis, right? If it's a lease for a year, 2 years, 3, it's just different because it's not the land itself. It's not like a property that's built onto the land. So in the eyes of the IRS, unfortunately, it's just not considered real property. So it does get treated a little bit different. Just something to consider if you decide to make this type of investment in a self-directed IRA, HSA, ESA, or 401k. Offshore real estate, we've got a lot of clients at NuView that invest overseas. This one's interesting because a lot of other countries, they may not allow US individuals or US trusts to invest in that country. You might have to create an international business entity. It could be an IBC, an international business company. There's probably a handful of others, but essentially what you do is you create an entity that's accepted in that country, send the money from the US states over to that international business company's bank account, and then you can do your offshore real estate investing. And it's definitely possible in a NuView self-directed IRA. It's always unique. I can't say that you're going to be allowed to invest in North Korea, but pretty much anywhere else, we've had NuView clients make some type of investment, whether it's an investment property, investing in land, but just know that you can go offshore. So start looking at those opportunities if you haven't yet. So we've covered all of the different types of real estate assets, at least that I could think of. So if there's any others that you could think of, please feel free to drop them in the chat. If you know a little bit, maybe a little description as well, and we can discuss them in the Q&A afterwards. But the list is pretty endless, right? And you can get creative with it too, and especially when you're, starting with a little bit of money, or maybe you're just trying to maximize your buying power, just know that you can get creative as you want, right? You can get as creative as you want if you're making this investment personally, and arguably you can get creative as you want with a NuView tax sheltered account as well. Like we talked about, there's just some rules you have to follow and some procedural steps that might be different than making the investment personally. Now, what does that process look like, right? And the strong majority of those real estate investments, the process is going to be arguably very similar at NuView, right? We're going to need a purchase packet, number one, that just serves as your written authorization to NuView that you would like us to make this investment on behalf of your IRA. We require that for any investment. And that's what you'll see in the picture here is an example of our real estate purchase authorization form. It's got your name that you need to fill in, your NuView account number, details of the property, details of the title company or escrow agent, property management acknowledgement. And then in addition to that, we do need whatever supporting documents come with the real estate investment. So if there's a contract, we need to see the contract. We need to see that it's properly vested in the name of your IRA. It's not your name on the contract, it's your IRA's name. And then because of that, NuView has to execute that document. So don't execute it ahead of time as the buyer, because guess what? You're not the buyer. Your IRA is. And like I said, because of that, there needs to be a NuView representative that signs off on that document. Again, if you're making this investment with a self-directed IRA. Copy of the deed, proper titling and address of the property, copy of the Housing and Urban Development Settlement Statement, and any other document that the buyer is required to sign at closing. This is what we require. And like I said, there are some unique types of real estate that we talked about. So again, if it's something that's outside of the norm, we're always happy to talk to you and just let you know what the process will be, or connect you with one of our real estate specialists who can give you some really good guidance on what exactly they're looking for to process that type of investment. But we can do it all here at NuView. Like I said, at the end of the day, you're only restricted from life insurance contracts, collectibles, and investing with what we would call disqualified parties or prohibited transactions. But like I said, outside of that, really anything is possible with a NuView Self-Directed IRA. And next, we're going to be talking about notes. So it's a little bit different way to get involved with real estate, hypothetically, or invest in private equity, and just some really cool things you can do with notes. So not as an exhaustive list as the different types of real estate, but definitely a couple methods that you can get creative and arguably be a little bit more passive, which, as I've previously mentioned, the IRS loves to see passive investments inside of an IRA. Doesn't raise any red flags, or arguably raises less red flags than other investment types. So we're going to get into notes next, and they're just, like I said, a very, very cool asset class that you can get very, very creative with. So promissory notes, promissory notes is a weird word to say. I have to pronounce it slowly each time I say it, just because it is a strange word to say. But at the end of the day, what is it? It's just a promise to pay, promissory note. And these come in different forms depending on what state you're in. They're sometimes collateralized, they're sometimes not. They have certain interest rates that the lender agrees upon with the buyer, maturity dates, when that note or when that loan is due to the lender, balloon payments, amortization periods, a lot of different moving parts and notes, but it's all stuff that you can kind of customize for your investment or for the needs of the borrower, or the returns you want to get, or how you want to get those returns, what the schedule look like. So notes themselves, this is essentially what a mortgage is, what a mortgage note is. When you go to buy a house, you need to borrow some money from the bank. They give you a mortgage note. If you go to buy a car and you need to get a loan, they give you an auto loan or an auto note. And in the case of companies and investing in private equity, there might be a different way to invest with them. Instead of just buying shares, you could actually loan them money as a convertible note. And what a convertible note does is, at a certain point in time, that loan is converted to shares in the company. It could be for a number of different reasons that you want to structure it this way. We're not here to tell you, which type of note you need to invest in, but it's something to look into and maybe something to bring up into a discussion with a borrower in the future. Because what we're talking about here is essentially being the bank, right? Instead of using a bank to get a loan, you're actually taking your hard-earned money or your IRA, 401k, HSA, and ESA, and you're loaning it out to other investors. You're being the bank and they're paying you the principal and interest back. In a nutshell, that's what notes are. How that note is written and the clauses and stipulations within is what will land it in one of these categories that you see here. So secured notes, all that means is it's a loan that's collateralized, meaning that you, the lender, can foreclose on that borrower and essentially take whatever the loan was collateralized by. Most often it's collateralized by an investment property, but it can be anything. If you can put a title to it, technically, that asset, whatever it is, could be the collateral for a loan, and that would be a secured loan. An unsecured note or an unsecured loan is essentially the opposite. It's not collateralized. We definitely don't recommend unsecured notes to most investors, and we don't recommend any investment type to investors, but unsecured notes, just by their nature, are more risky than other types of notes. And this is because they're not collateralized by anything, meaning that the borrower, if they wanted to, they could just leave the country and you, the borrower, would be left with nothing, left with no recourse, because the loan itself, the note, there was no language that said you, the lender, could foreclose on X, Y, and Z asset. So unsecured notes, while we still see them done at NuView, clients doing unsecured notes with the self-directed IRAs, it's just not that common because it is a bit more risky than other types of notes that are secured, convertible notes or shared appreciation notes that we haven't talked about yet. Shared appreciation notes are essentially when a lender loans the borrower money in return for a share in the future increase in appreciation. So again, it's all about the language. If the borrower agrees to the terms that you've written in that note, hypothetically speaking, anything goes, but just like anything else, we definitely recommend getting some legal counsel. Depending on what the loan is secured by or the type of loan, there might be a certain type of attorney that's better than others. If it's a secured note secured by real estate, then a real estate attorney might be the contact for you, just to make sure that the language of the note is sufficient. And we're not attorneys. We're not in the business of writing these notes ourselves. So it's definitely something that probably should be outsourced, just to make sure that the T's are crossed and the I's are dotted, and make sure that you as the lender are secure in this investment, or at least if it's an unsecured note, that that at least it was drafted properly. Now, last on the list, we've got mortgage note funds and trust deed funds. And first, we'll just talk about the difference between mortgages and trust deeds. And when it comes down to it, there's really not much difference at all. We did a webinar recently with Dawn Pitts from Ignite Funding. What she does and what her company Ignite Funding does is they have trust deed funds, and trust deeds are pretty much the same as mortgages. It's just trust deeds are the method in certain states for a home buyer to get a loan to purchase a property, and in other states it's mortgages, right? So the process is a little bit different. In trust deeds, there is a third party involved, where in mortgages that specific party may not be. Just some really kind of splitting the hairs kind of nuances. But like I said, it's just a state by state difference. So you might just have to look up what's in your state or in the state you want to invest in to see what type of note or trust deeds are required. But the important part here is that there are funds that might purchase hundreds of mortgages, or might purchase hundreds of trust deeds. And what the investor does is they invest into that fund. So instead of the IRA or the investor just owning one note and getting the payments off of one note, they're arguably more diversified amongst hundreds, sometimes thousands of notes, right? And that fund is, as the fund is servicing the notes and collecting interest payments back and the principal payments back, they're making distributions to their investors. What's really cool about Ignite Funding specifically is that what ends up happening is if Ignite does have to foreclose on a borrower that's not up to date on their payments, what Ignite does is they actually create an LLC where all of the different investors in that fund are members of that LLC. The LLC forecloses on the property. The LLC sells the property at auction. And in most cases, I'd argue, maybe not all, those investors, after that house is sold at auction and all the owners of that LLC get their payout, they might be making more than the original payout from the loan itself. So just some unique stuff. Important part being is that trust deeds are arguably synonymous with mortgages. It just depends on the state that you're in. And if you don't want to do the due diligence of finding the individual notes or going and buying notes from banks or other investors, just know that there are funds out there where you can arguably, again, be more passive, buy into a large pool of notes and have another company service it, and you just get distributions back. Notes are probably one of the most passive investment choices. So the IRS gives these 2 thumbs up for self-directed IRAs, 401ks, HSAs, and ESAs. So especially if you're in that situation where you're racking your brain trying to figure out how to structure an investment that it's not going to incur that business tax, notes are oftentimes a good way to circumvent that. Maybe you don't want to be an owner of that business, but you could just be a money partner to the owner of that business. And then that way you're still able to, get some returns from investing in a business. But realistically speaking, you just invested in a note. You just made a loan to a business. So you're just a passive money partner. Again, a good opportunity to speak with a CPA, a self-directed IRA friendly CPA, just to make sure that the way you're structuring it isn't going to incur that tax. But like I said, a good way to circumvent possibly being taxed as a business if you want to invest indirectly in LLCs, LPs, corporations. And that's what we'll talk about next, is different types of businesses. But first and foremost, I do want to talk about how you invest in notes in your self-directed IRA, right? And if it's secured, the process is a little different than when it's unsecured. If it's secured, we need a purchase packet for notes like we talked about. We've got one for real estate as well, and a copy of the note. Again, this is if the note is secured or collateralized by real estate. And we'll need a copy of the note and then a copy of the mortgage itself. If the note's unsecured, then we do need the original. So you'll actually have to mail us the original, right? And I know it goes without saying, but of course, if you're making these investments outside of a self-directed IRA, this all isn't necessary. Again, I would recommend speaking with a real estate attorney or some type of legal counsel to draft the note if you're making it with your personal cash, because you still want to, make sure you're crossing the T's and dotting the I's. But this just gives you an idea if you want to invest in these assets using a tax sheltered IRA and really add to the power of compounding interest by not having to pay capital gains tax on these investments. That's where this comes into play. This is how you get to do these types of things in a tax shelter, like a NuView Self-Directed IRA. Like I said, we've got the health savings accounts, education savings accounts. Those ones are use now accounts, right? They have smaller contribution limits, but you can start using them immediately for qualified medical expenses or education expenses. But since they have lower contribution limits, if you've got one of those types of accounts, notes are something you should be looking at very, very closely, because you don't need a ton of money to get started in notes. You just need somebody who needs to borrow money. And depending on the amount of money they need to borrow, it could be as little as, $500. It could be as much as $500,000, right? But that range is important, because when you're talking about small accounts like a newly established IRA, newly established 401k, or just an HSA or ESA with low contribution limits, notes are a very cool investment opportunity because you don't need a ton to get started. Like I said, next we're going to go into private equity. And this can mean a lot of different things, but essentially you're just investing in businesses, right? And businesses might be structured a few different ways. They could be LLCs, LPs, limited partnerships, trusts, corporations, startup companies, or even joint ventures. More often than not, since these are private companies, they might have a higher return than publicly traded stock. And this could be for a lot of different reasons, right? There could be a startup company out there that just got a lot of funding from a venture capitalist, which increases the value of the stock, has rapid appreciation. But at the same time, though, just like when we're talking about distressed property and real estate, there could be a distressed business out there, or a business that you drive by on a daily basis where you look at their property and you say, wow, if they just had, a little nicer signage, or if things were just a little bit better lit inside, or maybe you've talked to that business owner and you know exactly what they need, or what they perceive that they need to increase their business. And you, the investor, can be that source of capital for them as well. And again, the way you structure this, it can either be a note if you want to circumvent potential business tax implications, or you could be you could still be a passive owner where you're not operating the company out of your IRA, but you might be a shareholder, or you might hold units, right? And this is where, private equity, it does flirt with, almost more traditional investments like the stock market. It's maybe a little bit more risky because these could be startup companies, but there is opportunity. And it's definitely something where if real estate really doesn't get you, if being the bank and lending, that doesn't excite you either, but you feel like you maybe have a penchant for picking companies, that are just starting out, and you could say, wow, like whatever technology they're working with or whatever their product is, I can see that making an impact on our world. This is an opportunity for you to get involved, arguably, before the train leaves the station, right? Ideally, right? There's a lot of companies that fail, right? I don't know what the exact percentage is, but a lot of companies, a lot of new businesses fail. So just like any investment type, private equity is risky, but it also doesn't have to be startup companies either. You could invest in well-established companies. So really, it's the world is your oyster, right? I just tell people is, when you're on your way to work in the morning and when you're coming home, just keep your head on a swivel, because there's investment opportunity everywhere. Everything has the potential to be an investment if you know the space, and you know the ins and outs. So again, that's the goal of this webinar, is to just give you an idea of everything that's out there, so that you can look through the list and kind of see like, wow, yes, that one excites me, that one seems really, really interesting, or I want to learn more about that. Or it's something that you might already be interested in, but you just haven't had the perspective, the investor's perspective of looking at it like it could be, a potential source of income for you, or investment growth for you. It's just all about that perspective shift. So like I said, keep that head on a swivel. Like I said, there could be something just down your street, and the same goes for real estate too. In your neighborhood, there's opportunity everywhere. So think outside the box, and just know all investment types are risky. The cool part about investing though is there's a lot of options out there, so you can find something that interests you, or something you already know, and just approach it from an investor or an entrepreneur's standpoint. So private equity in your self-directed IRA. Let's say you have a NuView account. Let's say you have an HSA that your employer gave you, or an ESA for your children's school expenses. How do you invest in private equity at NuView? Again, for any asset type, we require a purchase packet, which you can see pictured here. And as you'll notice, if you can read it, you basically ask to give details of the investment, the company, what type of entity is it, the LLC, LP, all those different options, what's being issued, whether it's units, shares, or an ownership percentage, the total investment amount, funding instructions, and then a little questionnaire at the end, just to make sure that you're not using your IRA to invest in a company that you're already associated with, right? We talked earlier about the IRS not wanting to see conflict of interest, or they don't want to see the IRA owner taking an early benefit from their IRA. This is one of those instances where we do have to, pose some questions to the NuView client, just to make sure that they're not taking their IRA and investing it into their own business or a family member's business, where there might be either direct or indirect benefit kicked back to the IRA owner, or any of those up and down family members we talked about earlier. So, like I said, it's just the rules you have to operate within. You're getting rid of capital gains tax forever if you use one of NuView's tax sheltered accounts. So just don't mess it up by breaking the rules, right? If you've got those hard-earned dollars in that tax shelter and you're ready to invest them, there's so many investment types out there and so many different ways you can put your dollars to work that you don't have to do it in a business that you already own or a family member owns and have there be potential red flags raised with the IRS. Again, if it takes you racking your brain and thinking about it 100 different ways to try to justify it, it's probably just not the right investment for your self-directed IRA, HSA or ESA, 401k. Just protect those tax sheltered dollars because it took you a long time to get them into that account. It's a hell of a lot easier to get them out, right? Or to get it back in, right? You have $6,000 a year contribution limits, right? It took you, let's say, 10, 15, 20 years to get that built up to a point where you can start getting involved in alternatives. If you do something prohibited and the IRS catches wind of it, your entire IRA could be distributed, penalized, and then you're lucky if you walk away with 2/3 of it at some point in some cases, right? And then if you want to get that money back into a tax shelter so you could have tax sheltered investments going again, well, guess what? $6,000 a year, and it's going to take you quite a long time to get that same amount of money back into that account. So that's why we say just follow the rules, right? There's no reason to flirt with disaster with the IRS because it's not a place that really anybody wants to be in, especially when you take into consideration the contribution limits, the penalties, the taxes. It's just not a good path to go down. But like I said, if you're able to follow the rules, you're getting rid of capital gains tax for the rest of your life, which means the power of compounding interest is just all that more powerful. Next, we're going to be getting into precious metals. So precious metals are a unique asset class because they've just been around for forever, right? In ancient times, they were used as currency, literally gold coins, silver coins. But in I would say recent years, but I mean, it's been a long, long time. It's more of a store of value. Some metals are used in industrial applications, and I've took a couple notes on some of these here. Platinum and palladium specifically. I didn't really know much of what they were used for. I kind of had an idea that they were used in electronic components. But just to go down the list, these aren't just precious metals in the sense of like they're valuable and they're going to appreciate over time. And arguably they will, but each one of these has industrial application that as a savvy investor, if you can learn that market, know the supply and demand that's created by the different industrial uses of these metals, you can probably do very well investing in precious metals. So gold, for example, it's used in jewelry, electronics, dental alloys. Silver, jewelry, solar technology, and electrical components, electrical component contacts. Platinum is used in automotive parts, medical technology, as well as electronics. And palladium kind of does it all. It's used in dental fixtures, jewelry, electronics. Like I said, it's just not stuff that people normally think about when they hear precious metal investing. They just hear, oh, invest in gold and silver. I'm doing that for when the US government collapses and the world goes haywire, and now I've got gold and silver to buy things, right? There is that crowd out there, right? Now, if the US government collapses, gold and silver skyrocket in value, I'd argue that we probably have bigger problems than just the appreciation on your investments. But that being said, from an actual use case standpoint, these metals are used in different industries. They have, different things that they're able to, to build, to be used for. The electronics part is really, really important, especially in today's world where everything is electronic or digital. And you can make these types of investments, for whatever your motivation is. This is an investment type that's been around since the dawn of time, right? But one thing that we do always mention to NuView clients is do a little extra due diligence when you're considering investing in precious metals. The market's been around for a very, very long time, which just unfortunately means that there are a lot of scam artists out there that, will inflate the prices of these metals, never ship the metals. And there's just a lot of opportunity for, clients, or just investors in general to, be led down the wrong path by somebody that's just trying to pull the wool over their eyes and scam them. Precious metals market, just make sure that you're doing a lot of research on the precious metals dealer. If you want to contact NuView, we have a questionnaire that we usually ask precious metals dealers that contact us just to make sure that they're reputable. It's still just the first layer though. You know, at the end of the day, if you're going to invest in precious metals using a NuView Self-Directed IRA, it is self-directed. So we do strongly encourage you to do your own research on these dealers and make sure that you're working with somebody that's reputable. So precious metals, if you decide to do it in your self-directed IRA, we need a purchase authorization form. That shouldn't come as a surprise at this point, but as you'll notice, they are a little bit different from each other, right? And when we're talking about precious metals, we need the dealer information, the metal information. So specifically the metal type, the form of the metal, whether it's coin, bullion, the weight, where we're sending the money, all these different things in addition to the purchase invoice from the dealer itself, right? And the purchase invoice, just like we said on the real estate contracts and just like we said on the notes, and just how we said on the private equity investments that they need to be titled in the name of your NuView IRA, the same goes for precious metals on that purchase invoice. One unique thing that also comes with precious metals investing using a self-directed IRA is that there needs to be a depository as well. So you'll see that number 2, NuView requires the following: precious metals depository holdings election form. Since we use a third-party depository, there needs to be an account set up for you there. There are some nominal fees that come with using the depository, but it's just all of what we need to facilitate this type of investment in your self-directed IRA. Unfortunately, you just can't store the metals at home. The IRS requires that your IRA's assets have a custodian, a third-party custodian that services your assets. And in this case, that would be a depository. That's where the dealer would ship the metals to. And then if you ever decided to sell the metals, that's where they would be sent from for the sale. All right, this one's going to be a little bit fun. This one is definitely a new asset class in the last, I don't know, I want to say 15, 20 years. I know Bitcoin's been around for quite some time, but cryptocurrency in general is just a unique asset class because it's extremely speculative. People call Bitcoin the digital gold, so it's an up and coming store of value. But what cryptocurrency really is at the end of the day, it's technology and it's code. And that really doesn't do it justice to describe it like that. But essentially what people think when they hear cryptocurrency is they think actual currency. They think, I'm transacting this asset of value for something in return. And they're thinking about it from a transactional sense. And while there's still transactions going on with cryptocurrencies, it's more important to think about currency as a way to transmit data or a way to transact data. And this is why you see so many different cryptocurrencies out there. Like I said, at the end of this list, you see altcoins. That's everything else. Cryptocurrency is a massive market just by the number of different cryptocurrencies that are out there. It's almost like a new stock market. And the way it's treated by investors is in that same light, because each one of these different cryptocurrencies, they're built and they're coded to transmit data a little bit differently than other ones that are out there, arguably very different in some cases. And that's why you see different cryptocurrencies that might be related to specific industries like healthcare, finance and banking, digital advertising, cloud computing, gaming, cloud storage. All of these cryptocurrencies are essentially an ecosystem themselves to where each one is built differently to transmit data differently for different applications. Just like how in the stock market, there's different companies that do different things. And that's why when you're talking about investing in cryptocurrency, it's not only as simple as supply and demand, because certain cryptocurrencies do have a limited supply. So those dynamics always play out. But then there's also the perceived use case, or the perceived importance of their use case in everyday industries and in everyday activities. So when somebody looks at, Ethereum or, any of the other altcoins that are out there that are built for very specific things, they're not just looking at the supply and demand aspect of it. They're looking at it from the sense of, is this going to be used significantly so in the near future? And if it is, and people are going to need to buy it to use it for its actual application, arguably now the dynamic of supply and demand comes into play, because the supply is going to go down and the demand is going to go up. And that's the approach that a lot of NuView's cryptocurrency investors take, is, they're looking from a simple appreciation standpoint, but then it is also a speculative bet where they believe that this specific cryptocurrency or whatever their portfolio is going to have real world application, or possibly already has real world application. So what's really cool about cryptocurrency, just like precious metals, just like notes, the barrier to entry is relatively low, right? You don't have to learn anything super complex to get involved. There's no minimums like there might be with real estate, having to put deposits down or having like a full purchase price ready to go. So for beginner investors, cryptocurrency and the other ones I mentioned are an attractive choice because it's not that difficult to get involved. But just like anything else, it does deserve, its own due diligence. And, I'm not intending for anybody to get overwhelmed from this webinar and all the different choices out there. There's just probably something, I hope, along the way that's piqued your interest and that you want to hone in on and learn some more about. So at the end of the presentation, we'll have a couple different resources for each one of these asset classes that you might decide you want to dive in a little bit more. Now, cryptocurrency and a self-directed IRA, there are a couple different approaches that you can take. Number one, NuView, we work with a platform called ErisX. They were just acquired by Cboe Digital. Pretty sure it's Chicago Board of Exchange Digital Division. Don't quote me on that. I'm not 100% certain. But we work with them, and their platform is available for NuView clients to create an account in the name of their IRA and then be able to buy Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. Now, if clients are interested in the other altcoins or alternative coins, then what they do is they create an LLC where their IRA is the sole owner of that LLC, right? So that LLC now has that tax sheltered benefit. The client will then open up a brokerage account of their choice in the name of that LLC. And at that stage, they can buy whatever cryptocurrencies and sell whatever cryptocurrencies that brokerage has to offer. So each option comes with its pros and its cons. The process is visible there for you. If it's a little hard to read and you are interested in cryptocurrency and you're curious what the exact process is, just reach out to us and we'll be able to provide this document to you. But like I said, each one comes with its pros and its cons. So it's worth, considering each and what might be right for you. Next up, we got traditional assets. So being a self-directed IRA custodian, this isn't necessarily what we're built for, but we can still do it for you. Most of the time people come to NuView because they want to get away from the stock market, but oftentimes they might be waiting for an opportunity. Like right now, the real estate market is arguably starting to cool off, but who knows, right? So clients that are possibly waiting to purchase an investment property and they don't want all that cash balance just sitting there earning nothing, NuView is able to set clients up with a sub account where they can invest in these types of traditional assets, possibly garner some interest while they're waiting for their alternative investment to become available. So traditional assets, they might include stocks, stock options, which stock options are kind of similar to real estate options or contracts, in the sense that you don't need to put up the entirety of the money to have exposure to price volatility, or appreciation potential, right? So a stock option, just like a real estate option where you say, I'm giving you this deposit, this good faith deposit that says, I'm going to, I can purchase this property from you, and just to show you that I'm good for it, here's a deposit. I have to make a decision by this date in the future, and I can either execute that contract and buy the property at the agreed upon price, or I can cancel that contract. I lose the deposit, but I back out of the deal. I don't want to buy that property anymore. Stock options are similar because essentially the stock option contract that you're purchasing gives you the right to buy, or in the case of some stock options, the right to sell 100 shares. Now, in the case of some stocks and some companies out there, actually buying 100 shares would take a lot of money to do so. Now, just like real estate, to buy a contract to do those things, it takes significantly less buying power to do so. And just like, real estate contracts, you might find somebody else who wants to buy that contract from you. Same thing kind of occurs with stock options, because that contract, depending on what the stock price does, might become more valuable at a later point in time. And you can just sell the contract. Very similar to wholesaling. Definitely not, these types of assets. It's not stuff that NuView necessarily specializes in, but it is something that's available to our clients. Mutual funds, same thing. Futures are cool. Mutual funds, I'll kind of jump back into. Mutual funds are a conglomeration of different companies. It could be ETFs, exchange traded funds, mutual funds that are sold, like Fidelity or Charles Schwab. They have mutual funds, and it's just a collection of different businesses and different stocks, so that you're, as the investor, diversified more so than just being invested in one company at a time. Futures are an interesting, financial instrument is what you could call them. And these are essentially contracts just like stock options, but futures for the entirety of the market, like the S&P 500 or the NASDAQ composite, the Dow Jones. These different financial products have futures, and these are contracts, just like how stock options kind of work, just how real estate options work, where there's expiration dates. Just again, different derivatives of the stock market. Bonds, those are government debt, essentially, where you can buy bonds from the government and cash them in at a later date for a return, hopefully. And then commodities, that's like your copper, your cattle, your coffee, your wheat, soybean. There are people that invest in commodities, and commodities are also something that can be traded by the contract too. So commodity futures are a thing as well. I got to say, these ones are probably not the most exciting. These are probably the investment types for, arguably the book nerds out there. But realistically speaking, it's just not stuff that most people already know about or have an interest in, right? Because not everybody grows up to want to be a financial advisor on Wall Street and understand all of these things. For most people, they have a 9-to-5, in a career that, hopefully it's something they're interested in. They have hobbies, and oftentimes it's easier to learn about something if you're actually interested in it, right? And that's where real estate comes in, because everybody has or maybe plans to buy a house at some point in their life. Everybody at some point, more often than not, has to go and get a loan from a bank. So why not be the bank with your own money to somebody else, to another investor? Private equity, everybody has a business that they interact with or some product that they enjoy or they like. So why not invest with that company? There's a lot of different approaches that you can take. My position is that it's usually easier to learn about something if there's already an established interest in that field. So traditional assets like these listed here, they're not bad investments by any means, but it's really easy for somebody just to get a 401k at a job and just start, dumping money into a Vanguard ETF or the S&P 500 and not really know about it. And when you don't know about it, there's opportunity for you to act irrationally, especially with how volatile the stock market is. And I'm not even just talking about the last couple of weeks. I'm just talking in the stock market's history, right? Obviously, over time, the stock market, the charts, they go from bottom left to top right. It's hard to argue with that. But what people struggle with is the daily fluctuations that, they might get cold feet. There might be a bear market for a couple months, maybe a couple years, and they get cold feet and they'll dump those investments and get out just because they don't know any better. right? But if they know their local community, they know what the real estate market's doing, they've bought a house before, they know some local businesses, they know other real estate investors, there's no reason for you to have to invest into the stock market. And that's where NuView does provide a lot of opportunity for investors out there because they're not limited, right? They can invest in what they know best. They can diversify so much more beyond what you can do with the stock market. And obviously the tax savings that come with it. People invest in all these different asset classes personally all the time. And they just might not know that you can do it inside of a tax shelter and never have to pay capital gains tax again. So that's just very, very important part. And just to touch on this, if you want to do traditional assets in your self-directed IRA, the way we do it at NuView is we set you up with a sub account at a traditional brokerage. It still is a pass through for your IRA, so it still has all the same tax benefits. But just like any other investment, we do need a purchase packet, purchase authorization form, brokerage account application, which comes attached to this, so we can provide that to you, an account agreement for that brokerage. And like I said, it just gives you the opportunity maybe to park your cash in something that still garners interest while you're waiting for your alternative investment opportunity to show up. So I did say throughout this presentation that I did want to give you some resources if you wanted to learn a little bit more about the different asset classes that we talked about. For real estate, I would definitely recommend you look for some local RIAs, which are real estate investor associations. Meetup.com, which has a lot of great virtual stuff nowadays, Zoom meetups with like-minded investors or just networking opportunity, and Facebook groups. This goes the same for Promissory Notes as well, because those two kind of go hand in hand. Where there's real estate investors, there's people that need money or require more capital. And private money, oftentimes, you might be able to get a better rate than conventional lending or hard money lending. It could be a quicker turnaround time. So as far as finding the opportunities, though, that's why I say go to the local RIAs, because that's where the investors are. That's where the real estate investors are who need the money. If you're interested in actually investing in real estate itself, there's a lot of great people at these meetings that are willing to offer their mentorship to you. Possibly this RIA has focus groups on a weekly basis where you can go and just learn more about specific topics, possibly landlording, property management in general, creative strategies. A lot of good knowledge that comes out of these RIAs, and they are oftentimes very, very cheap to be a member of. For talking about private equity, like I said, keep that head on a swivel as you drive throughout your local community. There's crowdfunding websites out there. And another one that's an interesting resource as well is disclosurequest.com. And this is where you can actually find, we call them Reg Ds, but essentially, private offerings of, more often than not, startup companies where you can go and you can find, X, Y, and Z company is raising $5 million. And this is the person to contact if you're interested in investing. So those opportunities, they can sometimes require you to be an accredited investor, which you have to meet certain criteria. Other times you don't. So all you can do is look and kind of see what opportunities are out there. Or like I said, just see what's in your local community, see if you can have an impact right in your backyard. Precious metals. You can learn about what precious metals are, what they're used for. Investing.com is probably good for that. Reputable dealers, though, again, probably something where you're just going to want to speak with somebody who's bought these types of metals before, or just do a lot of research. I know there's some very reputable dealers out there, but at NuView, we are usually very hesitant to, mention any names or make any recommendations, just because we know that this market does have a strong likelihood to have a lot of scammers in it. And we just don't want to put the NuView client in any position where they're getting scammed. And, like I said, just do your research, do a little extra due diligence if you want to get involved with precious metals. Cryptocurrency, a couple sites that I've stumbled across are coinmarketcap.com or CoinGecko. And these are actually just two cool sites where they've essentially got an entire library of different cryptocurrencies that are out there. So you can search one if you've heard of it. You can see who their founders are, what the project aims to do. Like I said, because a lot of these cryptocurrencies, it's not about money. It's not about transacting monetary value. It's about transacting data and possibly transacting data more efficiently for different industries or different uses. And both of these websites are great at giving you kind of like the lay of the land on any coin you can think of. Again, like an overview, the founders, what the project is intended for, the supply, the demand, all of that. These two sites are very good resources. And then for your traditional assets, there's some, very popular sites right there where if you're interested in, like I said, the stuff that's in the stock market, these are probably a good couple sites for you to look at: investing.com, morningstar.com, dividend.com. And anything else that you can find, really, like I said, just pick something out of all of these. Don't get overwhelmed with all the different ways that you can invest your hard-earned dollars or your tax sheltered dollars in your IRA, 401k, HSA, or ESA. Don't get overwhelmed. Just go through the presentation, kind of see which one makes you maybe raise an eyebrow, sets off a light bulb in your head, maybe something that made you go, oh, wow, I didn't know about that. And just focus on that for a little bit, spend maybe a couple weeks, couple months, like researching it and kind of seeing what that approach would be like, and see if it's something that might be digestible for you to learn more about. And just focus on that, right? And then as you start getting good at that one, maybe it's time to look at something different. Right. And if you're the advanced investor and you already know about majority of these, you know about all the different types of real estate, but you maybe didn't look at it from the lending angle, or just maybe there was something you just simply didn't know about, learn more. There's nothing wrong with learning more. You just don't want to be stuck in a spot where you've got paralysis by analysis. You don't want to try to learn so much because you feel like the more you know, the better of an investor you'll be, because that's oftentimes not the case, where you learn, and you've got all these different options and you think they're all so good. Well, while you were learning all of those different options, you had 1, 2, 3, 4, 5 opportunities pass you by. So like I said, find something that interests you, it doesn't feel like a chore to learn more about it. And that's where I'd say start, especially if you're in the real estate world, start at the local RIAs. Private equity, I like the idea of investing in my backyard. So I constantly look around and see what businesses are out there that, I either frequent or I'm just curious about, and, think about investing in your local community. Precious metals, cryptocurrency, and traditional assets. That's kind of just like a computer research type approach you have to take with those, just because it doesn't necessarily play to your local community all that much. I don't think there's many meetups on gold investing or anything like that, but just do your research, find the reputable dealers. Cryptocurrency, I would strongly recommend not putting your kids' college savings in Shiba Inu coin or Dogecoin. That's probably not the smartest idea. Bitcoin, Ethereum, they're all still really speculative. So all I can really say to you, like I've said this entire presentation, is just do your own research, get comfortable with one of these, and get your feet wet. Again, don't put the whole nest egg into one specific thing, but, really just try to hone in on something that you feel like you could be successful at or learn more about over time. Just to reiterate, these are the benefits of self-direction. So, at NuView, we have the tax sheltered accounts you need to invest free and clear of capital gains tax for the rest of your life. We allow you to diversify far beyond stocks, bonds, and mutual funds, not to knock those investment types because that doesn't make them bad investments, but NuView does allow you to invest in what you know best. So if those stocks, bonds, and mutual funds aren't it, and real estate, or your local community well, or cryptocurrency, precious metals, that's where the power of a NuView Self-Directed IRA comes in, is because you can invest in what you know best with all the tax savings, with better diversification possibility. And we just hope you stay up to date and get started with NuView, because the best time to start was yesterday. There's a lot of ways that you can get creative with small amounts of money, but if you don't need to, and you can start today, start saving for your retirement, start saving for medical expenses with an HSA, start saving for school or college expenses with an ESA. Again, the best time to start was yesterday, right? But if you're starting today, just know that there are some creative strategies out there, some asset classes that have a lower barrier to entry that can allow you to start building your retirement today. And as you'll see here on the screen, nifty little QR code there, give that a scan and you'll get to our educational resources page. Got an archive of all our previous webinars. And before we sign off, we do want to take some questions. I know that was a very, very lengthy presentation. So I hope everybody's piled into the Q&A in the chat with some good questions. As I've mentioned before, I'm not an expert on the individual asset classes, but if you have questions about how one of those investment types might be perceived in an IRA, happy to answer those questions. So drop them in the Q&A, drop them in the chat. If it's something that you think of afterwards, we're always happy to respond via email, or you can chat with us on the phone. Our email address, if you want to talk to an IRA specialist like myself, IRA Specialists at NuViewTrust.com. Or you can call us at 407-708-1853. But as we wrap that up, do you want to see if we got any questions here today? So let's see what we got. Any questions? Let's see what we got here, Grace. I know we had some questions come through during the presentation that Grace was able to help answer. I haven't seen anything come in since, and I know this presentation was really, really lengthy. There was a lot of details, a lot of information. So if you guys do have questions after you've had a chance to look through the presentation again, feel free to email us. Like I said, IRA Specialist at NuViewTrust.com. Miss Camille, yes, we do still have a promo for new account holders. As long as they're not a NuView client currently, we are still always open to waiving the account application fee. So for today only, Camille, if you want to reach out to whoever needs a NuView Self-Directed IRA, just give them the promo code FREE22, and that'll get the application fee waived for them. And for everybody else that's watching, that'll be good for the next 24 hours as well. If you want to get started with a new IRA, 401k, HSA, or ESA, we can waive our $50 application fee for you. But like I said, it's only good for 24 hours. So by this time tomorrow, I want to see that email inbox flooded with all kinds of new people wanting to open up some new self-directed IRAs. So just taking another look here, again, haven't seen any new questions come through. So guys, I'll let you get back to your day. I know that was a lot of information, so digest it all. As I mentioned previously, try to find that one thing that interests you, really dive into it, really learn as much as you can, and then take action. Don't get paralysis by analysis and think that you have to master every single one of these investment types, because there could be one for you, one very special one that could make the difference as you save for retirement. So that's all I got for you guys today. Thanks for hanging out for all this time. Again, if you have any questions, email us at iraspecialist@NuViewTrust.com. My name is Alex Sylvia, and IRA Specialist here. Appreciate you hanging out, and we'll see you next time.